Welcome to a time to have a look at the markets picture. Starting off with the Asian side of things, markets on that particular part advancing as investors digested the FOMC minutes and, of course, the Fed's statement that they will continue keeping rates on hold, of course, saying that the U.S. economy isn't quite exactly where it wants to be. So we'll dissect what that FOMC meeting means for the dollar and in fact for us as well. But looking at that particular picture, we had the Chinese markets on the mainland side of stuff higher, with the Shanghai composite up 0.5%, the Shenzhen composite up 0.4%, and of course we did see the Hang Seng index in the final hour of trade up 0.4%. And of course, looking at markets in Japan, they were closed on the day. That is because of a public holiday taking place on that side. But looking at markets in Europe, advancing as well, of course, as global peers digest those Fed minutes. And everybody's still waiting for earnings on the European side from companies such as Total, Shell, and Airbus. So a busy markets day playing out on the European side of things, with the FTSE 100 up 0.7%, the German DAX bucking the trend there, down 0.3%, and the French CAC up 0.5%. When you look at the US picture, markets on that side, of course, taking in the blowout earnings coming out through from some of the two biggest tech companies, Apple and Facebook being one of them. And then when you filter it down onto our local markets, they were firmer on the day, up 0.3%. Again, investors taking in those Fed minutes. The resources appearing unchanged at this particular point in the financials, leading that trend up 2%. But to get into details as to the events of the week, the FOMC markets, what that means for the dollar and the rand, we are joined, of course, by Matete Tulare, who is from RMB. Matete, thank you so much for your time. So, I mean, let's get right into it.
Happy Thursday.
Happy Thursday to you too. Markets not appearing quite at all fazed by the slightly dovish stance by the Fed. What do you make of yesterday's Fed minutes? And perhaps maybe we can talk about what that means for the dollar.
Well, I mean, as expected, Anastasia, I think the Fed yesterday, the statement remains quite dovish, and also the chair there, Jerome Powell, squashed any speculation about any early start to tapering and possible interest rate hikes that has been communicated to the market, and the market has been preempting for the past couple of weeks. I think what we also saw is Fed officials obviously welcoming an accelerated recovery that is now more evident, including sectors that were badly hit during the part of 2020, during the pandemic. And also what we've also seen is that the central bank has obviously toned down their expectations of a higher than anticipated implied economic risk from the virus in acknowledgement of obviously the broad vaccine rollout in the US market. And I think this is quite interesting because, as we've noted, the Fed will always give us guidance in terms of their interest rate decision. And on the back of this, we have seen the dollar slightly weaker across, the rand, the euro, etc. So that's what we've seen over the past couple of hours ever since the Fed announcement last night.
The one thing I love about the Fed minutes is that we analyze everything from every word to the tone to various aspects. And at that press briefing, Fed Chair Jerome Powell mentioned that there are signs of froth in the market. Do you believe that when we do get to that point where we're starting to wind down, we're starting to see, that interest rate begin to rise, that we will start to see those signs? He will give you an indication that this is about to happen. Buckle up.
So it's actually quite an interesting dynamic because, I mean, for the past couple of weeks, we've been just studying how the market has been anticipating this potential interest rate hike and quantitative easing tapering. And I mean, if you cast your mind back to, call it 10 years ago, 2010, 2011, the market was actually being dominated by the same key themes of quantitative easing, tapering, and possible increase in interest rates in the US and also in the EU. So it's actually quite an interesting dynamic that 10 years later, we're actually still talking about the same key themes in markets about whether we're going to see a potential interest rate or not. But I think also what the Fed obviously yesterday meeting, they were actually met with growing optimism about the US recovery, obviously helped by the widening vaccine program and also the aggressive monetary and fiscal stimulus that they have pumped into the market. But, the one key thing that I think, as you say, you listen to the tone of the chairman, and I think the one thing that he highlighted is the fact that the economy is beginning to move in the right direction with some real momentum. And that said, the Fed is obviously keeping, their bond purchases at still $120 billion a month. And obviously, their interest rates still close to zero. But the one thing that they are actually going to look at is substantial progress with regards to employment and their inflation goals. So it looks like they're very much happy with the course that they are on, and they're not likely to change anytime soon.
Let's bring it more locally. What do you make of the Rand's performance?
Actually, I think so. The Rand has been the best performing emerging market currency over the past 12 months. It has returned about 27% in the past 12 months. And now we're actually getting ourselves back to the pre-pandemic levels. I think what is actually helping the Rand from three factors is obviously the strong commodity price that we are seeing. We are also helped by the strong trade surplus, partly due to the high commodity price and also the high real government bond yields that we have seen. I think those three key factors are playing themselves out. And on top of that, the mere fact that we've got all this stimulus packages that are being designed by the US. Obviously, the other important one was Joe Biden also talking about a $2.8 trillion infrastructure project and also a $1.8 billion stimulus package that is also feeding through into the market. We have seen the Rand touching this morning at 14.15. Now that's the 2021 lows of the year, and actually we've touched the same level, call it 2 weeks ago, and it looks like we are struggling to break that 14.15 level. But if we do see ourselves break that 14.15 level, then definitely we could see the Rand strengthening down to around 13.85 from here. But that's still a bit of a far away. We also need to still break the psychological level of $14 against the barrel. $14 against the dollar, and then we can obviously talk about 13.85 on the bottom side.
All right, one key theme you think will dominate markets for the rest of the week or so?
So I think there's a few key themes, as you mentioned earlier. U.S. earnings season is obviously something that we're all watching. In the next hour, we do have U.S. GDP data that is going to be quite interesting, just to give a sense of where the U.S. economy is heading out to. But also from a local front, May the 7th and May the 21st will be two key important dates, because we do have Moody's and S&P, the two ratings agencies, giving us a ratings review. And I think that will also be quite critical in terms of where we go as a country over the next couple of months.
All right, let's leave it there. Thank you so much for your time. That is Madete Tulare from RMB, talking to us about what to expect in the next week or so, mentioning those key dates that we all will be looking forward to. And of course, at the end of the day, we will have those US Q1 GDP figures as well as the initial jobless claims. That's it for me. We're going to take a quick break. After this, we've got the labor report.